If you've ever jumped into a hot stock only to watch the price immediately drop from under you, you know how important it is to be early. That's the problem with most penny stocks. Once everyone knows about the company, it's too late to do anything but lose your money. In this video, I'll show you how to find the best penny stocks that no one is watching. I'll then reveal 5 penny stocks to watch that could double your money or more. We're talking penny stock investing today on Let's Talk Money. Beat day. Make money. Make your money work for you. Creating the financial future you deserve. Let's Talk Money. Hey Bowtie Nation, Joseph Hogue with the Let's Talk Money channel here on YouTube. I want to send a special shout out to all you in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, there is no doubt that penny stocks offer some of the best opportunities for returns. These small company stocks can surge higher for 100% plus returns like the trillion-dollar companies just can't do. But the problem is that most investors are just chasing the crowd when it comes to investing in penny stocks. I've seen a lot of investors on Robinhood and even in our own Facebook group, Let's Talk Money Together, they're just chasing those smallest companies with the lowest share prices. And the problem here is that most of the returns are already sucked out of these stocks by the time you get to the shares. Case in point, shares of Nikola, ticker NKLA, were some of the hottest in the market in early June when the stock hit $77 a share. But at that point, investors were already flooding into these shares. You see here, the green line is the number of Robinhood investors holding the shares, and the magenta is the share price. Over 136,000 investors held those shares in Robinhood alone, and there was just no surprise left in the stock. Those shares have now lost over half their value in just 2 months because there's no buyers left. When everyone is watching a stock, sellers have all the power. Nobody was watching Netflix in 2010 when it had just 12 million subscribers and the stock traded at $7 a share. That's why it went up to the best investment of the decade for a 4,000% return to 2020. Another example, nobody was talking about billion-dollar cloud services company Fastly when I recommended it last March at $11 a share. But with the rest of the market catching on, the shares have shot up over 700%. It is not enough to find a great penny stock to buy. You have to find it before the rest of the market. And that's the trick, right? FINRA estimates that 6 in 10 households hold stocks in the United States alone. That's 77 million investors and doesn't even count the professional stock analysts just poring over those penny stocks trying to find the next cash machine. How do you find something no one else has found? That's what I'm going to show you in this video. I'll first walk you through a quick screener to find penny stocks, the fundamentals I use to look for an investment. Then I'll reveal how to narrow that list to the undiscovered penny stocks to buy, the ones with the most potential. I'll then reveal the 5 penny stocks to watch that could be your best returns of the year. Now to start here, I'll usually use a simple screen in the Webull app to narrow my list of penny stocks. I can click through to markets in the menu, then access the stock screener, and you can save screens here for easy access in the future. The first thing I do is narrow the market cap. Now that's the company's market value of shares to less than $100 million, which gives us the very smallest companies. Now, technically, small cap stocks can go all the way up to $1.5 billion in market cap, but anything over a few hundred million is going to have a lot of analyst attention already. I'll then go into volume here, and this is the average number of shares traded on a daily basis, so a great measure of the market interest in a stock. Now, we're trying to find companies that the market isn't wild about over just yet, so we'll narrow this down to less than 100,000 shares traded on a daily basis. I'll also use this ROA screen, that's the return on assets, for one last factor in that company performance. Here, I'm not trying to kick out too many companies, but I do want to focus on those with positive return on assets. As you're using the screener, you can see that it updates below with the number of stocks that meet that criteria. You can also use some of these technical indicators as well and some other fundamentals just to narrow the list a little further so you don't have to research as much. Besides the stock screener, I really like this Webull app for its other features like the stock simulator that gives you $1 million to test out your ideas in paper trading. I'll leave a link in the video description below. Check that out and get 2 free stocks worth up to $1,400 when you make your first deposit. Now, I want to get to those penny stocks I'm watching, so we're going to get into that list now, and then I'm going to show you a few more tips to narrow down that list and find the truly undiscovered names with the most potential. I'll be putting all 5 of these into my Webull paper portfolio to track before I invest. The first penny stock I'm buying is Ramaco Resources, ticker METC, a $96 million metallurgical coal miner with assets in the United States. Coal hasn't quite made the comeback many were waiting for, but it's still a needed resource for metallurgical manufacturing and other industries. Aramco is trading for an enterprise value of just 0.5 times revenue, which means a buyer could come in and get it for half the value of those annual sales. It's a profitable company, which is pretty rare among penny stocks, and has a solid balance sheet. The company has $15 million in balance sheet cash and just $25 million in debt. Daily trading volume averaged just under 100,000 shares in the last month, but has settled to under 50,000 shares a day lately. Just 735 Robinhood investors hold this stock, ranked 3,185 on the platform, and only 4 analysts cover it in their earnings estimates. Next here is $25 million Interpace Biosciences, ticker IDXG, a diagnostics lab for analysis and treatment of cancers and targeted therapeutics. Biotech is the industry this year, and while most of the money is going to the COVID diagnostics and trials, there's going to be a lot of that flows into other programs as well. No part of the biotech market is as popular, profitable, and necessary as oncology, so any company that can carve a niche for itself is going to be a winner. And this is another company with a solid balance sheet, which is so critical when you're looking at these penny stocks. You want to make sure that the company has the cash reserves on its balance sheet and not too much debt so it can survive and have that flexibility in this market. Interpace has more than $13 million in cash, so more than half of its stock market value in cash against just $4 million in debt. Just under 2,000 Robinhood investors own these shares, which puts it ranked number 1,938 on the platform, which is a little more popular but still not widely held. Just 4 analysts have earnings estimates for this stock, so a lot of room for surprises there. So I know this is a lot to throw at you, and I've got 3 more penny stocks to buy, but I want to get back to that point of how to find these and then narrow down that list of potential picks. Once I've narrowed down that list of penny stocks to maybe 100 or so, I'll go online to Morningstar or some other data service to find those with consistently increasing revenue, and then check out the rest of the company's financials. I'll check the balance sheet strength as well as that all-important operating margin. Here, I'm just looking for a definable competitive advantage, either in the company's operating performance or in its product. That should leave you with a short list of the top penny stocks, but not necessarily the stocks you want to buy. Remember, it's not enough to find great companies. You need to find them before anyone else. So for that, we're going to check 3 sources to find the undiscovered penny stocks. We'll first go to Yahoo Finance, or most online investing sites are going to show you this, and you're looking for the number of analyst ratings on the stock. We'll use OBSEVA, ticker OBSV, as an example here. And we can go here to the Analysis tab, and it's going to show us that the shares are already covered by 7 analysts. Now that's not a lot. Shares of Apple are covered by more than 3 dozen analysts, but it's still some pretty heavy market attention. Next, we'll go to RobinTrack, which is a really useful resource for seeing what Robinhood investors are buying and where that stock market sentiment is going. RobinTrack ranks the stocks available on Robinhood by the number of investor accounts, number of investors holding those shares. So we can see here that just over 3,000 Robinhood investors hold those shares, making OBSEVA the 1,408th most popular stock on the platform. Now obviously that's not hugely popular, and especially with that big spike last November where the shares added more than 2,000 investors holding it, this penny stock doesn't look like it's going to be one of our undiscovered gems. Finally here, we can go back to Yahoo Finance or really any platform, and I want to look at the volume of shares traded over the last 6 months or so. Here, I'm just looking for any big spikes where the market has already seen something to get excited about, and here we see that in early July, the shares saw a big spike in volume, up to 10 times that normal daily volume. So nation, this is going to mean some research on your part, but it's the only way you can be sure that those penny stocks you buy haven't already had their day. And finding these undiscovered stocks means that you're much more likely to book those huge returns when the market finally sees what you see in the company. Modus GI Holdings, ticker MOTS, is a $35 million medical technology company in endoscopy procedures. This company is focused on the development and sale of its PureView system for early detection and prevention of colorectal cancer. Now, excluding skin cancers, colorectal cancer is the 3rd most common diagnosed in the United States, with more than 50,000 Americans dying from it each year. Now, revenue isn't spectacular on this one, but it has been increasing it to $110,000 last year from just $40,000 the year before. It's also got $21 million in balance sheet cash against just $9 million in debt, so definitely that flexibility that we're looking for. 895 Robinhood investors own this stock, making it the 2,940th most popular on the platform. Or not widely held at all, I guess would be a better way to say it. Just 6 analysts cover the shares, and earnings estimates are all over the place, so plenty of surprise potential in this one. $73 million Velocity Financial, ticker VEL, is a real estate lender for investors with 1 to 4 unit rentals and small commercial properties. The company operates mainly in New York, California, and Florida, which are likely to see a rise in loan defaults, but probably not as bad as everyone thinks. It's a profitable company, and the spread between that business cost of capital and the loan rates should support the revenue here. This one is also the most undiscovered of the group, with just 354 Robinhood investors holding these shares, putting it at number 4,178 on the platform. Only 4 analysts offer earnings estimates here, but even the low estimate is for profits, with revenue expected around $63 million for the year. And we've still got one more penny stock on the list, and honestly, this is the one I'm most excited about, but I gotta warn you about these high-risk, high-return investments. There are 3 huge risks you need to know about when you're investing in penny stocks. First is that these low-volume stocks, so those with fewer investors buying or selling the shares each day, they're gonna have higher bid-ask spreads. Now that's the difference in the price between buyers and sellers in the market. It's not usually an issue because there are just so many investors in stocks like Apple or Tesla that the spread is less than a penny per share. But in some of these penny stocks, it can be several cents a share. That means if you just put in that market order when you buy the shares, you could be losing out on a few cents immediately, which can be a % or 2 on these stocks. So here you do need to look at that bid-ask spread and should consider using a limit order when you buy. Now this is where you tell the platform that you only want to buy at a certain price, so you don't have to worry about that spread. Another risk to penny stock investors here is that these are extremely susceptible to those pump and dump scams. A pump and dump is when you get a group of investors hyping up a stock, trying to get as many buyers into it as possible to push up that price. Then they sell out of their shares and let it drop back down, and it always does because the price is no longer going to be propped up by that manipulation. Any stock with a price under a few bucks a share or under 20 or 30,000 shares traded on that daily basis is going to be an easy target for these because the boiler rooms and the scammers can easily go in, manipulate the price with just a few $100,000, and it doesn't take much to push that price higher. Now, unfortunately, there is not much you can do about this except for be on the lookout for when it hits a stock. A good clue is if the shares start surging with no legitimate information or news directly from the company. This next warning is just to stay away from those pink sheet stocks. Those are the stocks traded on what's called the over-the-counter market, or the OTC, rather than on the NASDAQ or the NYSE. Now, the problem here is that these OTC stocks have none of the reporting requirements or the regulation you get on those other markets. So it's just so much harder to know if a company is legit or not. There are thousands of penny stocks traded on the NASDAQ or other legit markets like the NYSE. You don't need to chase those pink sheet stocks. Probably the riskiest of the 5 penny stocks is a $130 million Play AGS, ticker AGS, a supplier of electronic gaming devices like slot machines and table games. Now that's obviously not a great market to be in when most of the casinos are shut down, but the company has also a mobile app segment that is helping to support some of those sales. Still though, AGS has over $500 million in long-term debt against just $43 million in balance sheet cash. It's expected to book $143 million in sales this year, about half of what it did in 2019 revenue, but then bounce back to $233 million in 2021 sales. Now, shares are off their 52-week high by 80%, so if this one can pull through, it's got a lot of upside to go. More than 4,500 investors hold these shares on Robinhood, making it one of the more popular stocks on the list, and ranked number 1,076 on the platform for number of investor accounts holding it. 7 analysts are covering the shares, though I think there's still some room for surprise in that upside return. Click on the video to the right for the highest paying monthly dividend stocks, 7 stocks with upside return plus cash in your pocket every single month. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.